So, hi everyone. Welcome to our session today from the GSMA. My name is Simon Anderson Manjang, and I am the data manager within the Mobile Money team. I am also joined by my colleague Kennedy Kemboy, who is our senior regulatory specialist. And today's session is called The Pivotal Role of Mobile Money, Driving Inclusion and Resilience. And I should say that this is essentially the Africa sort of cut, as we call it, of our State of the Industry report that we publish every year. So this is an Africa-focused session on mobile money, where it is right now and sort of where we're going. So without further ado, let me get right pages up here. So I wanted to start off with just giving you an idea, basically, of what goes into our data points. We'll start off with essentially what we call the deployment tracker, which monitors the number of live mobile money services across the globe. And it is sort of our market intelligence tool where we keep track exactly what services are live, what they're offering, and where they are, obviously. What also goes into our data points is information from our global adoption survey, which we send out to all mobile money services globally. We usually have a response rate of, at least around 115 services or so I think we had last year, and a good 80% of the market in terms of value. And lastly, any gaps that we might have are filled in by our estimate and forecast process. So we have country models for each and every country where we sort of do a bottom-up assessment of each country and region and globally and so on. So I guess I jumped ahead a bit, but we'll have a Q&A session later on, and I know it's just an hour session today, so that's why I'll start off straight away without using too much time. So I thought we'd start off maybe with a helicopter view of 2020, what's happened at a global level. So these are our global figures from the report published back in March, just to kind of refamiliarize some of you with it. Some of you might have seen it before, but I think it's good for context to kind of go through this again. So on the top row, you see the number of registered accounts, which reached 1.2 billion. The number of the value of transactions per day reached $2 billion that is. And it was also a great year for international remittances. We saw a huge increase, 65% year on year. The big figure in the middle talks about the 300 million active accounts, monthly active accounts. And as you can see, there's also a significant growth there. Again, this is just to give you a bit of context. At the bottom here, you see in the middle that there were 310 services worldwide across 96 countries. But as I said, this is an Africa session, so let's go straight to the continent. So these are the sort of top line figures for Africa. And as I mentioned on the last slide, 310 services worldwide, 171 of these services are in Africa, so more than half. I mean, obviously, this is also driven by the fact that Africa is the continent in the world with the most countries. For a bunch of historical reasons, but I think it's worth still recognizing the size of Africa here in mobile money. And as the title says here on the page, we're growing across all metrics pretty much. We are. So that is registered accounts, active accounts, transaction volume, and value. And I just wanted to mention as well, when we talk about Africa in this session, it is we're talking about Africa as a whole and not just about sub-Saharan Africa or certain parts. And I think that's especially suitable in this year when we see the sort of continental free trade area up and running finally as well. So from Cairo to Cape and from Dakar to Hargeisa in the east. So again, if we look at some of these metrics, with registered accounts, for example, you can see that they grew by 12%, and the monthly active accounts up by 18%. And we then have both volume and value actually growing quite strongly. As you can see, value actually reaches almost $500 billion in Africa last year, and that's up 23% year on year. So I think the story of Africa and mobile money has been told by many over the last 10 to 15 years, but I think it's important to remember here that basically, Africa is still at the very core of this story, and the story is far from over. Africa continues to grow across all metrics. But let's give Africa some more granularity, and the granularity that it deserves. So for the first time, we can actually offer some country level insights, and this is thanks to our new index, the Mobile Money Prevalence Index, which takes into consideration 3 different metrics, and that is the uptake of mobile money among the adult population. It is account activity rates, and it is also how many active mobile money agents there are per adult. So by bringing these metrics together or amalgamating this, essentially what we can do is to create this traffic light system where we can essentially say where mobile money is most prevalent and where it is least prevalent. And this is without disclosing any of the sensitive data that has been provided to us. As I said, I wanted to include this map to kind of give Africa the granularity that it deserves. If you've been following the space for a long time, I think there might be a few surprises on this map as well. Most of us know about the sort of pioneer markets in East Africa, and even sort of strides made by Ghana in the last 4 or 5 years or so. But I think it's important to remember essentially that there are other markets that have now reached this very high level, and these include, depending on your geography here, so as you can see, it's Benin, there's Republic of Congo, there's Zimbabwe, there's Eswatini, and Lesotho in the south. So it's interesting to see those small markets in Southern Africa really pushing ahead as well, and Central Africa increasingly joining West and East Africa on this journey. And I think you see a couple of pale spots on the map. I think it's worth remembering that obviously this map will change year on year, and we expect it to look quite different next year. And one of the reasons is, of course, the launch of telco-led mobile money in Ethiopia by Ethiotel, or Telebir, as the service is called. And we also have Angola coming online. It was a big blank spot on the mobile money map for a long time. So we've seen Unitel launch their mobile money offering in the last couple of months. And from what we understand, Africell will also not just be joining the MNO market, which they've recently done, but they will also be launching a mobile money service in 2022. So Angola will be going from 0 telco-led mobile money services to having 2 within a year. I should say, though, that we are including both telco-led and bank-led or fintech-led solutions here, as long as they're available to the unbanked or the financially excluded, essentially. But in the interest of time, I'll push on a bit. This map is, this table is a bit detailed, and it's not maybe the best fodder for a presentation like this. I thought I'll run through some of the highlights here, just again to kind of differentiate the different regions from each other. I think if you want to have a closer look at this, then I urge you to go onto our website. This table is in our State of the Industry report, published a couple of months back. So you can go to gsma.com/SOTIR. But if we talk about the sort of highlights, on the West African side, you can see very high growth. Let me see if I can add a laser pointer here as well. So here you can see the very high growth that we're seeing in terms of value in West Africa. It's very impressive, and we're seeing a lot of increased competition, both in Senegal and in Cote d'Ivoire, both from new players and sort of tougher competition between already existing players as well. Southern Africa is quite small in terms of size. As you can see, value is significantly lower than West, but there is a lot of growth. As I said on the previous slide, we have the smaller markets pushing ahead, and we also have MTN launching mobile money in South Africa, unfortunately just before the pandemic. But from recently released public figures, there seems to be some real growth there. So it'll be really interesting to watch South Africa, obviously the sort of powerhouse in the region, and see what happens there, and also to see it could be lessons to be learned for North Africa as well, because functioning in a middle income economy can be quite different from some of the low income economies. But again, I won't dwell too much on this. North Africa has higher value than Southern Africa, but in terms of volume, it's very low. So it's high ticket sizes. It's not your everyday person-to-person transactions that much. There's a lot of sort of higher transaction values flowing around. Central Africa growing very fast. If you look at volume, pushing ahead, value also. But then obviously East Africa at the bottom here, we see in terms of value huge, even if we look at registered accounts here as well. It's obviously the biggest block, but do keep an eye on the map here. It is a very wide definition of East Africa, and it is the US definition. And the reason that we're sticking to the US definition is that we're working towards the Sustainable Development Goals, of course. But again, if you have your spectacles on and you're good at geography, you'll see that that Zimbabwe is included, for example. So this definition of East Africa runs from Sudan in the north all the way to Mozambique and Zimbabwe at the bottom. So it's just worth keeping that in mind. And lastly, of course, as I mentioned in the last slide, with Ethiopia and 100 million citizens potentially getting new opportunities for access to mobile money, at least this year, we could see this figure increase even further. So that's kind of setting the scene. I'll kind of breeze past this one. I just wanted to give you some dynamics as well to kind of see what's happening. And you see the East African share of active monthly accounts really shrinking over the last couple of years. Obviously, the absolute figures and the total numbers are all going up, but East Africa's share has shrunk from 73% in 2015 to 58% now in 2020. And West Africa being the big gainer here. And I guess, again, to kind of tie back to the previous slide, we need to keep in mind that this is before the sort of pushes that we see in East Africa now, in Ethiopia, and of course, mobile money in Nigeria is not quite at the same stage as some other West African countries. So this kind of breakdown could look very, very different in a couple of years. It's also worth pointing out here how Central Africa has gone from 5% to 10%. And maybe I should mention one thing on activity in general as well. Actually, when we talk about activity, this is looking at monthly activity. So there are 161 monthly active accounts. That does not mean that the remaining accounts are inactive. We should think of activity as a spectrum and not a binary sort of on and off switch. So there are, if we look at accounts that are active on a 90-day basis, we will be adding another 60 million accounts. So reaching about 220. So it's worth just keeping that in mind when we talk about monthly active, that there are active accounts outside of both monthly users. But I'll push on, and I wanted to maybe spend some more time on the agent network, and I think this is something that will, I think in the sort of wider industry in mobile money, this is something that will be spoken more about. It is the core asset of the mobile money industry, and the network itself is continuing to grow, as this slide shows. So I guess what's interesting that despite the outbreak of the pandemic, the agent network grew throughout that. And as you can see, over the last 5 years, there's been steady growth with 7% growth quarter on quarter since 2015. So that is quite significant, and as you can see, there's no real sign of it letting down. It's almost a linear curve. And even if we look at the more sort of mature services, they grew by 26%, as you can see in this blue box at the bottom there. So it's interesting. Basically, like these mature, the biggest networks are still growing at 26% year on year. So that says a lot about both the demand and maybe competition, but also the opportunity in the market, and also how the mobile money industry still considers the distribution networks or agent networks crucial to the business. And I think maybe especially this is important to increasingly important to talk about when seeing as there's more and more talk about digital currencies, both decentralized cryptocurrencies, but also central bank digital currencies. And there's a lot of talk about financial inclusion, what it would lead to. And I think what's important to remember that mobile money's strides in financial inclusion have really been possible through the agent network, and that any digital currency that does not interact across the cash economy will automatically exclude a lot of people, that the poorest of the poor, the most excluded, continue to remain very closely attached to the cash economy. And I mean, I think it's quite obvious why. I mean, if you you won't be keeping your money for your most vital sort of sustenance, your bread and so on. You won't be keeping that money digitally if you don't know when the next time is that you can charge your phone. So the talk about digitizing is a huge part of what's happening in industry, but we shouldn't lose track of what the agent network really means, and that it is the agent network that really tackles financial inclusion. Let me see if I had anything else I wanted to mention on this slide. I think that's pretty much it. I think with digital currencies, obviously we're seeing Nigeria talking about the e-naira. We're seeing South Africa talking about more of a reserve currency or a cross-border central bank digital currency, so CBDC. So it'll be really interesting to kind of see what's happening with this, and I think we'll focus more on this in the next couple of years, most definitely, and hopefully we can bring some more information on kind of the interaction between these different parts. Now, I won't spend too much time on this slide either. I think mostly here, I just wanted to show that the monthly average per cash in, cash out per agent is coming down, and this might sound a bit contradictory if we compare to the chart before, but we need to think about in both in this chart and the previous one, there can be an overlap. So, for example, this figure here of 5,000, which is the cash out value, so that is the value being cashed out by an agent on average. What we need to think about here is that we essentially obviously this is where agents are making their commission, but also this is sort of where I guess where we see there is a double counting essentially, and as an agent you can be you can obviously offer services to several providers. So these figures can be, an agent can be making money from several providers essentially. So that the fact that the figure is going down might not be that worrying, because at the same time we know that there is increasingly overlap. So more and more providers, or more and more agents, are offering the services of several providers. So one outlet, but several providers. So I think what's interesting here actually is the fact that it kind of it's plateaued and sort of stabilized, and we'll see where it goes from here. In terms of scale, this is the cash-in value across Africa in 2020. So 133 billion was digitized and entered the system in 2020. And as you can see as well, there is the ratio sort of between cash in and cash out stays fairly similar or stable over time, around 20%. And that's that's also interesting. So those 20% go in, circulate for a while before they get cashed out. But again, I won't dwell on this too long. I just wanted to kind of show, hopefully this is slightly clearer. Sorry if I was unclear on this last slide, but when it comes to unique agents, so to simplify, basically the number of registered agents is highly dependent on the number of actors in the market, whereas the unique agent outlets are there's more of a natural ceiling to the unique agent outlets, because obviously there's only so many places where you can actually set up an agent, or a place that you can convert to an agent. I guess knowing how many of these physical transaction points there actually are could be really useful for NGOs, for aid organizations, and in the long term even e-commerce companies, because again the agent network, the physical agent network, is the point where the industry interacts with the most excluded. So in the long term, especially in the last year, obviously we've seen so much going on, and sort of government-to-person payments and so on. But also, as I said, in the future for NGOs and aid organizations, it can be very useful to kind of know exactly what the physical footprint is, because the registered accounts figure will always have a double counting, because it is supply-side data being reported by several different providers up to the central banks. A full methodology on this slide you'll be able to find in the State of the Industry report as well, at gsma.com/sorter. But I thought I'll go into transactions a bit to give you a better idea of the money part of mobile money, I guess, what's actually happening, what's growing, and so on. What is pushing growth maybe. So as I said on the opening slides, almost $500 billion were transacted in Africa last year. And of course, talking about figures that are this big, talking about hundreds of billions of dollars, sometimes you can lose a bit of context. So I wanted to share this slide basically to break down the same value into what is being transacted per day in Africa. So as you can see in the sort of blue boxes on the left-hand side, there is now more than 1 billion more being transacted per day in 2020 compared to 2015. And I think what's interesting is, even if you look at 2017, just in 2017, the amount being transacted has doubled. So we're still in such a strong growth part of the industry, which is of course really exciting after more than 10 years of existence. And as you can see in the blue bar here as well on the right-hand side, even our most conservative forecast expects us to reach 2 billion before the end of 2025. So again, there's no let up really here, and we expect growth to continue. Now, if we wanted to maybe take a moment on the next slide, and so this is essentially the breakdown of the ecosystem. So this is where the value is. This is all in terms of dollars. This looks at just the month of December of 2020, and I'll spend for those of you who aren't part of the industry, essentially, I'll leave the slide a bit to kind of sink in, but to simplify, maybe I should say that on the top part here, we're looking at the digital transactions. So that's digital in, digital out, and circulating value. So that's what's digital, and then you have cash out and cash in at the bottom. Yeah, I think, what should I say else on this? I think I could say that we've seen a slight decrease on cash out and cash in over the last year, and a slight increase in especially digital in through bulk and bank to mobile as well, but also in circulating value. And if we look at the kind of digital share, as you can see, it accounts for a majority. 52% of all value in December 2020 was digital. But I guess, to be perfectly honest here, it's not that helpful to look at the level of digitization at a continental level. There is obviously a lot going on a regional level, and I guess high growth in a young market, especially a young and large market, could make this overall figure shift, because the sort of early growth will most likely be very cash driven, cash in, cash out, and P2P driven, essentially. So by new large markets joining, this digitization figure might be pushed down temporarily before then growing again. So that's why I've included the slide on the regions, to kind of give you a bit more nuance and granularity. So I guess at first glance, some of these look very, very similar, but I think it's worth looking a bit closer, especially if we look at East Africa. It's bill payments and bulk payments in dark blue, and so the bill payments are in orange, bulk payments are in dark blue. That East Africa sets itself apart, and also in merchant payments to some extent, and this obviously adds to the level of digitization for East Africa. Meanwhile, West Africa has a high chunk of merchant payments in comparison, not in absolute terms, but at 4%. So I think it's important to try to look for the sort of devil in the detail on these ones. I think what's interesting on the West Africa slide pie chart as well is the share of international remittances, which reaches 4%, and of course this is driven by the sort of the WMOA, the West African Monetary Union, and the fact that transactions can be made cross borders within the majority of French-speaking Africa without having to change currency. It really helps to push that up, and we have some of the biggest corridors on the continent in West Africa. But to kind of boil it down, this is what it looks in terms of digitization, and you can kind of clearly see here that it's East Africa leading the digitization push. West Africa being right on the edge there, almost tipping into being a majority digital. But it is East Africa that is by far the most digital, whereas Southern Africa and Central Africa are actually quite similar, and even North Africa. So with that, I wanted to see how we are for time. I wanted to just go through this slide on interoperability, basically bank interoperability and the ability to send money from to and from banks, and it's essentially a crucial way of creating an integrated financial system between the bank and the unbanked, essentially, or the underserved. So on average, African mobile money services are integrated with 10 banks. If you can see the chart on the right-hand side, we see the orange figure here being mobile to bank, and the area in blue being bank to mobile. We see essentially, obviously, that together they're growing, but the blue line here is what's interesting, that we see the ratio creeping up, that from the beginning there was more money flowing into the mobile money ecosystem and not as much flowing to the banks. But this is slowly reaching parity. This figure might have been boosted a bit this last year because of different fee waivers that were included, which I'm sure we'll speak about in the regulatory section. But I think it's important to kind of see the trend and where we're going, and hopefully the fact that we're reaching or getting closer to parity, hopefully that will encourage more banks to also integrate more with mobile money providers. And I think, through that sort of different parts of the economy or individuals within the economy can more easily reach each other. I think the next section, then I'll hand over to you, Kennedy. And
Yeah. Thanks, Simon, for that introduction. Perhaps you can just move to the next slide. Yeah. Okay. Thank you for that. Thank you for the very good introduction. The numbers, very interesting to see the growth in the industry. All attributable to, of course, also a very favorable regulatory environment within the region. So what I will do on my part is just to try and take you through how the regulations look like. As we all know, mobile money thrives in an environment that is conducive in terms of the laws and the legislations, and that will be the focus of my presentation. Let me begin with our tool called the regulatory index, which we normally use, which basically is a tool that shows how progressive regulatory frameworks are for mobile money in the different countries that we normally have mobile money deployments. The reg index looks into 90 countries, some of which are in Africa. And we did the latest iteration for the index, which we released sometimes this year, and we were able to see some of the shifts in terms of the regulations for the different countries that we observed. So Egypt was one of the countries where we witnessed a significant shift upwards, and they have worked on their KYC regulations, including consumer protection regulations, and I think also transaction limits, which made it more favorable for mobile operators to be able to, conduct mobile money services. So as per the reg index, Egypt actually had one of the best improvements that we've seen so far. Ethiopia is one of the markets where we've also had a lot of interest. As some of you may know, the government embarked on liberalizing the telco sector, and also this had an impact on the payment sector because now they've allowed telcos to be able to offer mobile money services. As you all know, telco-led mobile money services have proven to be the most efficient thus far, and this is a step in the right direction. When we looked at the laws for payments in Ethiopia, specifically the laws for mobile money, we noticed that there was a great improvement also on other aspects around KYC. For those who may know the details of Ethiopia, it's a country where they do not really have IDs, but the central bank was able to, curate a legislation or rather a regulation that permits mobile operators to be able to onboard customers even with the lack of IDs. So it's one of the countries where we really see positive shifts and upward shifts for that matter. Then we have Zimbabwe. So Zimbabwe saw a dip last year, according to the analysis that we did. And this is because the central bank took a decision to stop the use of mobile money agents. And this was part of a cleanup exercise they were trying to undertake in the country. So as of now, telcos are not allowed to use agents to provide mobile money services. It's an area where we really hope that the regulator will reconsider, because as Simon has been able to demonstrate, agents play a very important role in the mobile money ecosystem. And so this is one of the areas of improvement. We also saw capping in terms of some of the pricing in Zimbabwe. And I think this is one of the areas where we believe there's need for dialogue to allow, pricing of mobile money to be more market-led. So just to speak a little bit more on the Reg Index. So the Reg Index tool is available on our website, the Mobile Money Metrics website, within the GSMA website, basically. And you're able to look at all the scores for all the countries. For those who may wonder, how do we come up with these scores? As I mentioned, we look at the regulatory instruments, but then again, we break it down into dimensions to be able to get a better understanding of the indicators that have more impact. So we look at issues such as KYC, transaction limits, we look at AML, CFT laws, we look at consumer protection, authorization, and the likes. So I guess that is on the Reg Index. For more on that, please check it on our website. Simon, we can go to the next slide. So one of the things I'd like to also touch on, which is sort of something that affected the industry in the most recent times, is the issue of COVID-19 responses that we were able to witness by central banks. So in the wake of COVID-19, central banks and governments embarked on trying to drive, the digitization of payments, and mobile money became the saving grace for many countries. One of the things you may all know about, of course, is that COVID is transmitted physically. And so, of course, the use of cash was a risk. And of course, now there was need to look for alternatives to avoid the use of cash, and mobile money became the saving grace. So to be able to drive this digitization of payments, central banks came up with a raft of measures to be able to encourage people. One of them being fee waivers, trying to reduce the cost of using mobile money services, albeit within just a short period of time, though in some countries this was also prolonged. Examples include Rwanda, Ghana, Kenya, Uganda, the West African states, of course, through their through their central bank, which is the BCIO. So like I mentioned, some of the regulators imposed this over a short period of time, others prolonged it, and the majority, I'm happy to say, were able to reinstate mobile money fees, which is very important for the sustainability of mobile money services. We also saw increased transaction limits as a measure to try and drive the uptake of mobile money services. This was done in Rwanda, Ghana, Zambia, Kenya, Tanzania. What I'd like to mention about this particular measure is the fact that, the SME sector has for a long time been locked out of using mobile money services because they do transact large amounts of money. And this was initially not factored in the regulations. And so this was a positive step by the regulators to try and also just, stimulate the use of mobile money by the SME sector. And one of the measures that we are really happy to note was made permanent in most of the countries, actually, if not all the countries where it was instituted. The other measure that we saw being pushed by central banks was flexible KYC requirements. Of course, now some countries really struggle with the issue of IDs. And, with the lack of IDs, many people are locked out of using mobile money services. Other than that, a common requirement and a common practice for onboarding customers is the requirement that a customer has to go to an agent outlet with their ID, and then having to have their mobile money wallet activated. So what central banks did was to try and reduce, or rather be a bit flexible around what is required in terms of ID requirements, and also just the need of having to go to an agent outlet to be able to, register for a mobile money account. So for instance, the BCIO, the Central Bank for the West African states, permitted for the first time opening of accounts remotely. So you were able to just open a mobile money wallet from the comfort of your home. And mobile money operators were given a grace period when they would actually verify KYC information, with the relevant authorities, which was indeed a very good step. And I believe one of the steps that actually led to an increase in the number of mobile money wallets for that part of the world. We also saw the same in Ghana. This was actually in Ghana already, but the central bank was more proactive in trying to encourage MNOs to do remote onboarding of customer accounts. And I believe in Ghana that is permanent currently. And in Eswatini, formerly Swaziland, this has also been made permanent, and it's indeed a step in the right direction. So those are some of the measures that we were able to witness. Of course, we also saw support being given to agents in terms of reducing liquidity pressure, declaration of mobile money service as essential services during this time. As you may all recall, there were lockdown measures. Mobile money operators needed to perform their services, and we applaud countries that were able at least to declare mobile money services as essential services for their different jurisdictions. So we can go to the next slide, Simon. So here I'll just try to touch on other trends that we have seen beyond that, what I've just mentioned around COVID. So, the regulatory environment in Africa keeps evolving over time, and this is informed by the different needs, both by policy needs and, of course, what is also observed amongst mobile operators. One of the trends we are seeing in the region is the issue of taxation. And, taxation is quite a sensitive issue because not only is it a cost implication on the part of the mobile money providers, but it also has a cost implication on the users of the service. And we are seeing a growing trend by many governments to try and mobilize resources domestically, and they're angling towards mobile money operators to be able to do this. A lot of this, as we have come to realize, is that there hasn't been adequate stakeholder consultation as to how properly taxation can be approached, and it's one of the things we are a bit concerned about, given especially the importance of mobile money in this area. So affordability is a key issue, and not only do we have taxes, we have other regulatory fees that MNOs and mobile money providers have to pay, and so there's need for governments to ease taxation and of course other mobile money regulatory costs as well, in view of the tough economic times that we currently witness. What is important to note is that mobile money operators are not immune to the economic that we're all witnessing, that all other sectors of the economy are witnessing, and we still call for a lot of dialogue when it comes to the issue of sector-specific taxation. We are also seeing a trend around eKYC. Official identification, as I mentioned earlier, is a challenge for many countries. Some countries still do not have official ID systems. Those that do have ID systems could be having very outdated manual or analog systems which do not permit electronic KYC. And so we are seeing a general and a gradual shift towards having digital ID databases in place. We're also seeing regulators trying to come up with their own financial identification solutions, given the challenges of trying to roll out ID solutions in these different countries. So this is also a very positive trend for us, and one that we hope will continue in the coming days. We are seeing a trend towards instant payment solutions in terms of interoperability. Many central banks are trying to come up with instant payment solutions to try and handle the issue of interoperability. On this, we are very keen to ensure that all participants have an opportunity to have a say in the development of these solutions, particularly around governance issues. It is one that we still continue to closely monitor to see how it will impact the business, but as what is important is to ensure that everybody has a voice and everybody's, especially commercial needs, are able to be addressed with some of the solutions that we get to see. Pricing is also an area where we are seeing regulators trying to have a bit of control in trying to come up with sailings and ensuring that customers are not billed in a certain manner. These have been introduced in form of pricing principles. It's also a gradual trend, again, that we are also observing in the region. One that we also really would like to affirm that, pricing is better left for market forces, because unless there's really a major concern around competition issues, there's really no need to be able to, touch on pricing. And in finishing, what I'd like to mention is that, mobile money providers are very creative around how they come up with their product offerings. And the issue of pricing is always arrived at after very extensive research and, sophisticated modeling to be able to ensure that customers have the best services and at the most affordable rate. So given those such considerations, I think pricing is something that we strongly believe should be left to the market forces to determine. So I believe those are some of the key trends for the region, Simon. I guess I'll just give you back the floor to continue with the other slides. I noticed that we are remaining with around 15 or so minutes. I think you're on mute, Simon.
There we go. A year and a half, and still this happens. So, thank you so much for that, Kennedy. So, yeah, I'll speed up a bit to make sure that we have time for some Q&As at the end. We're also joined by our head of program and our regulatory director as well. So we hope to be able to answer as many questions as possible. I just kind of wanted to mention that these are some of the key areas to think about when we look ahead. I think we'll touch on several of these areas in the Q&A as well. So I'm not going to sort of say that these aren't important, because these are extremely important topics that we need to think about more in the next couple of years. And the first one is obviously gender, and we see the level of exclusion that still exists on the continent and beyond, of course. And first, I want to thank our sister team, the Connected Women team within the GSMA, for the data on the left-hand side. The data looks at phone ownership or mobile ownership, and as you can see, there's 74 million women still unconnected in sub-Saharan Africa, and 23 million in Middle East and North Africa. And when we talk about ownership here, this is defined as having the main use of a SIM card and using that SIM card at least once a month. So you see there's in the circular, in the circles, essentially, there's also the gender gap. So that is the gap between men and women when it comes to ownership. So there's a problem in a structural problem in ownership already. And then if you look at the chart on the right-hand side, this is actually looking at mobile money. So this structural problem in ownership, phone ownership, also translates into mobile money. However, when we see the most mature markets, such as Kenya, we see this gap narrowing. So I think, in more mature markets, it's narrowing, and in very fast growing markets, such as Mozambique, for example, we see this gap being the largest. And I think the idea that we need to think about here, I guess from an equality and a development perspective, that one of the main reasons for pushing and encouraging mobile money as a business is that indirectly mobile money mitigates a lot of these structural problems. It's worth keeping that in mind, that it's sort of what the business side often talks about as customer acquisition has great impact on a lot of structural problems in societies and economies. In terms of time, I'll hop past this one. I think a lot of you have probably seen this. This is just talking about remittances, how important remittances are, how stable they are in terms if we compare them to foreign direct investment. And currently, most remittances are not being transacted via mobile money. They are going through other channels, such as mobile money transfer operators and banks, of course. But mobile money remains one of the cheapest channels. We have a paper on this on our website if you want to take a closer look. It's about mobile. I think it's called International Remittances and Responding to Crisis. I believe the name was something like that. Pardon me for not having it right in front of me. Sorry, actually, mobile money remittances supporting lives during crisis. That's it. Lastly, I want to touch on just the opportunity in government-to-person payments. As you can see on this chart is from the social report. Latin America did great during the crisis and really increased the number of unique customer accounts that received government-to-person payments. Africa did not do that much. And obviously, safety nets, social safety nets, and so on, very different between Latin America and Africa and so on. But I think Africa for the future needs to think about building social protection schemes that are fit for the future, essentially. So it's worth keeping in mind that as more economies in Africa also transition into middle income economies, they will start seeing a lot of the issues that Latin American countries are seeing. So hopefully Africa can actually learn from the outside here when it comes to mobile money and not just be the trailblazer. The final slide just comes down to mobile connections. And I think we should remember that at the base, what enables mobile money at the very bottom is obviously the GSMA's original raison d'etre, which is the mobile industry as a whole. And if we just look at what's happening and what's happened in mobile connections over the last 5 years, we see Africa overtook Europe in Q4 2018 in terms of total connections, and the Americas in Q3 2019. So that's Americas as a whole, from Argentina and Chile to Alaska and Canada in the north. So it's just important to keep this in mind. Obviously, there are some caveats about dual SIM ownership or even per capita ownership and so on. But the population of the Americas is more or less comparable to that of Africa. So yeah, some of those caveats don't actually hold that well. And I mean, maybe finally, I guess, as is very obvious from the chart, the growth profile of Africa is just very different, and mobile is likely to continue to unlock more and more opportunities across the continent. So I hope we have some time left for Q&A. I think we had this is just a bit of a call to action. Visit our website for more data. That's gsma.com/mobile money metrics. So if you want more data, including the regulatory index that Kennedy was speaking about, this can all be found on our website. Now, we're a bit squeezed for time. I wish we had a lot more, but as it goes with these presentations, there's always a bit of a extension. So I wanted to just bring on board Ashley Olson Onyango, who is our head of team, the head of financial inclusion and agritech within the mobile for development team at the GSMA, and also welcome Brian Mufiora, who is our regulatory director based in Nairobi together with Kennedy. So I think from that, were there any, because we rushed through the end here a bit, maybe I'll start with you, Ashley. Did you have anything that you wanted to kind of touch upon straight away or expand on? Maybe a conversation around gender?
Thanks, Simon. Yeah, we can jump in and talk about gender. I think there's also a few questions in the chat, so I'll try to be quick. But I know one of the recent slides that you showed about the gender gap is really an interesting one. We often ask ourselves, how can we get more women to access mobile money? So this is a big question that the ecosystem and the sector is working on. And I think from our vantage point, we continue to look at the barriers. The first precursor of a woman accessing a mobile money account is, of course, having access to a mobile phone. We know that the gender gender mobile phone gap is reducing. So we published earlier this year the annual gender gap report, reporting that the gender mobile phone gap is at 7%. For sub-Saharan Africa, this is a little higher at 13%. So the first, I think, challenge and barrier is to really get mobile phones into the hands of women. In addition to this, we see women facing other barriers such as lack of identification, which we can start to look at solutions through policy and regulatory, making this more enabling for women that might lack this. There's a perceived lack of trust and the risk of fraud, so we need to do work around the perception of the safety, as well as consumer protection, just making sure that the systems are safe for everybody involved. Literacy, digital skills, ensuring that we're improving those amongst women, and of course cultural barriers, which are very context specific. What we do know and what we have seen is that mobile money, particularly in sub-Saharan Africa, has really helped to narrow this gender gap in financial inclusion. So particularly in markets, as Simon mentioned and showed on that graph, where we see more mature markets where mobile money adoption rates are quite high, we're seeing this gender gap start to reduce quite rapidly. So as these barriers start to get broken down, women have more access and are able to engage financially with their mobile money accounts. But there's still work to be done. And again, just to reiterate, the country context is quite important. So we need to be looking at this with the private sector players, with the mobile money providers in these markets, and see what barriers the women are facing to address those.
Great, thanks, Ashley. Maybe then I'll put one question here to Brian. I'm not sure, maybe some of this was answered by Kennedy, but we have a question on what is the status of some of the emergency measures put in place for COVID? Are governments rethinking transaction limits, KYC processes, etc., more permanently after COVID?
Thanks, Simon. I'll take that question, even though I think Kennedy covered some of it. I think what we've seen is a number of countries have made permanent many of these measures. The transaction limits, for instance, have more or less become permanent, the expanded limits and wallet balances. We've also seen the declarations of essential services. It's now becoming norm that every time perhaps new curfew measures or new COVID control measures are imposed, that these declarations extend to mobile money providers. I think the remote onboarding requirements for some countries were temporary, more or less as a measure to address the emergency needs of that time, places like Egypt, I believe. But in some other countries, I think the remote onboarding measures have become permanent, or at least have led to more, permanent discussions around, normalizing the remote onboarding measures, or at least it has stimulated debate on what needs to be done to ensure that customers can seamlessly be onboarded onto these services without delays. I think on the transaction limits as well, it kind of demonstrates that regulators have been introspecting on the rationale for imposing low limits. I think the initial rationale was that the services are perhaps risk prone, but I think over time I think the evidence has borne them out that mobile money services are actually perhaps not as risky as they thought, and that doubling or even tripling the transaction limits does not have any kind of adverse impact on the community served by mobile money.
Great. Okay, thank you. Let me look at some of the other questions. I think we're actually just about a minute left here, so I think instead of trying to squeeze something in, I wish we had more time for Q&A. We have our Twitter handle. Hopefully it was some of you caught it on our slides. Otherwise, you can email mobilemoney@gsma.com. We're more than happy to answer any questions. You can tweet at us, email us, and any way you want to reach out. So thank you so much, everyone, for joining us. Thank you, Kennedy. Thank you, Brian, and thank you, Ashley. it's a pleasure to be doing these presentations, and hopefully we'll see you all again soon.
Thanks, Simon. Thanks, everyone.